Good morning, everyone. This is Financial Literacy 101. And today's stock tip, I said I'm going to do about 2 or 3 a week. I'm on my third one. I believe that giving the information, just looking at, again, all the data out there that you guys can actually, make some money just doing certain things with your finances nonetheless. So we're going to jump right into it. I'm going to give you my stock tip for today. Plus, we're going to go over some analysis. So you guys should stick around. I'm going to just do an overview. And then later on, I'm going to actually probably teach you guys how to read it, okay, in another video. I don't want this to be too long. Good morning, Nolan Baptiste. So let's get into it really quickly here. Let's look at the stock I want to give you guys today. Okay, the stock for today is Hertz. Okay, right down here is one of the top gainers for today. Now, I believe that Hertz is one of those you can day trade and you can also short-term trade, in my opinion. Day trade and short-term trade. And the reason why I say that is because it's been a very volatile stock lately. Let's just look at the trend here over the course of this past year. Now, granted, if you would have started off early on and as it tricked up, it got all the way up to $19 per share. Okay, $19 per share. If you go down here, we're looking at the RSI down in the below, right below this. Let me see if I can blow this up so you guys can see this better. Here's the RSI. And then right at the low, right, this was during March. If anybody would have invested, it was, let's see here, $5. Then it rolls up to $6.50, $8. My apologies, $8. And right now, Hertz is trading at $1.50 or so. Back fluctuating back and forth. Now, if you look right here, you see says 52-week high was $20, essentially $21. Okay, and the 52-week low was less than $1. So that much movement in a year, in my opinion, is a very volatile stock. I mean, I would like to know what Hertz is doing to make their stock revenue price, go all the way up to $20 and drop all the way below $1 in 1 year. The only thing that I know about Hertz is rental vehicles, but I'm pretty sure they do a lot more than that because just looking at the name, it says Hertz Global Holding. Okay, so they do a lot more than probably rent vehicles. They may have their hands in a lot of other things as well. So let's read about Hertz. It says Global Holdings. Hertz Global is a holding company. The company owns rental car, Intermediate Holdings, which owns Hertz Corporation. Hertz Global's primary operating company, the Hertz Global operating segments, include U.S. rental cars, international car rentals, and all other operations that U.S. RAC segments is engaged in. Let's see if it names anything else. It also states that the U.S. rank segment is engaged in the rental of vehicles, such as cars, crossovers, and light trucks, as well as ancillary products and services in the United States. The international RAC segments engaged in rental and leasing of vehicles, such as cars, crossovers. Okay, is very repetitive. Let's see if they name anything different, which provides fleet leasing and fleet management service and other business activities. Operations managed through the Hertz Dollar and 33 brands from approximately 12,400 corporate and franchise locations. So again, it's not just Hertz, it's Dollar and Thrifty. So they're a conglomerate, guys. They are a conglomerate. They're a huge corporation and they are worldwide. They lease, like they said, cars, trucks, and also fleets. And I'm pretty sure they have some their hands in other things. But here, look at the averages here. The average Hertz stock price target is between $20.50 with a high estimate of $30. A high estimate of $30. Right now, you can get this stock for a measly $1.50 or below, and a low estimate of $3. But right now we see that it's trading at, right now it says it's underperforming. It's underperforming, and this is a good indication because it's not saying sell, it's not saying buy, it's saying hold it, okay? And that is underperforming at 25%. That means that there's still a lot of room for this stock, for this company, this corporation to grow their share price, okay? That's all that's really saying. And do I believe that you should buy it? What's $100, okay? Now, if you don't have $100 and you got $5, then go ahead and buy 5 of them. Well, maybe 3.5. You know, it'd be WeBull or Robinhood. And after this video, I will let you know that I have the links in the description where if you join through anyone, WeBull or Robinhood, you're going to get a free stock, okay? And with WeBull, if you just deposit, not even trade $100, they're going to give you a second stock for free. So that's already, you know, 2 stocks for free, essentially, and then the stocks that you'll actually buy with your account. Let's move right along. I don't want to bore you. So here we are on one of my favorite is Market Watch, and this is a little more clean cut. Let's go right to the year mark. Let's go right to the year mark, and let's look at the volatility here. So right here on what date is this here? No, let's go a little further down here. This stock in May was, you know, essentially $3.60, and then it jumped up to $4. But the point is, the reason why I like to show you, you know, the histogram here, all the data points, is so that you can see that the stock market is ever changing. But certain stocks who have their hands in a lot of cookie jars, it may have, you know, lows, but they also have highs. Let's see how they've done for the past 3 years. Let's see how they've done. Okay, they're up and down. So there's not too much volatility here. You don't see a huge dip. The only huge dip you see is when COVID-19 hit. Okay, when COVID-19 hit, a lot of stocks actually depreciating in value. So that is information that is really on, you know, you really can't estimate it. You really can't look at it. It's just a moment in time when it comes to a stock. But for the most part, this is a steady stock that's going up and down, up and down, up and down, up and down. Okay. All right. So that is my stock pick for today, is Hertz. And the ticker is HTZ. We can see that they're operating out of debt at $1.69. That's the earnings per share. Their flow average, the flow shorted rather, is 35.68%. And then look, their year average, they're at a -90. That's because when you're up $20, $21 a share, and then you drop below $1, come on, your performance is going to be horrible. Okay, your performance is going to be horrible. But every analyst rating, whether it was on WeBull or Market Watch, they're saying hold it. None of them are saying sell it. They're saying hold it. So right now, you can get Hertz at a very, very discounted price, under $1.50 a share. That's remarkable. Okay, and again, when you buy Hertz, you essentially buy $1 and thrifty. Okay, because they're a global holding company that also encompasses those 2 other rental companies. Okay, so now that's the stock tip. Let's get into some information I think that you might find profitable. That should help you out the way that we look at things. Okay, the way that we look at things. Let's look at Hertz here. So this is not doing what I wanted to do, but nonetheless, let's do this. We're going to go over some information for you guys. We're going to stick with Hertz. And we're looking at the averages. I'm gonna spread this out a little bit, okay? So we can see this. Now, this is today's performance, okay? This is today's performance. This is for the year. I'm trying to stretch this out so you guys can see how I set this up earlier, but of course the internet is unforgiving. But these are your candlesticks. I talked about this all the time, and we're going to get into some RSIs. We're going to get into some MACDs. We're going to get into some BULL. We're going to get into some VWAPs. You're going to understand these terminology. Again, this is the overview. We're not going to deep dive into these things because I don't want to talk over your head. I just want to give you a little bit of information, okay? All right, so here's your candlesticks, okay? Here, big green bar shows you that a stock is actually appreciating in value. Then you have the red bar showing you that it is depreciating in value, and you have up and down. Now, again, the usual pattern that I've seen for most stocks, not all, for most stocks, is 3 greens, 3 to 4 greens, and then you'll have anywhere from 2 to 5 reds, okay? And I'm speaking very layman terms. So if you are an advanced investor, you know what I'm talking about. And so I don't want to say dumbing it down, but I'm making it to the point where anyone can understand. So just understand that. And then we'll get into certain terminologies later. All right, so you have your green bars, you have your red bars, also called candlesticks, also called a lot of other things, okay, indicators. That's all this is. And this is essentially a histogram, okay? So for you people out there who don't know what a histogram is, let's look up what a histogram is, okay? Right here from Investopedia, a histogram is a graphical representation that organizes a group of data points into user-specified ranges. That's it, okay? That's all a histogram is, okay? Let's go back. Again, so as we look at this histogram of the candlesticks, we can see the indicators and the data points showing us how the stock is moving, Now, we have the line side, I have it on candle. You also have hollow candle, the way things look. We can also make them like this, where the green are hollow and the red are solids, okay? Again, I'm using WeBull for this, but what I like, you also have the colored bars. This is this preference of how you like it, okay? But this is the most common one. Some people like this. Some people like the graphical airlines here, where you go up and down, you see the highs and lows. Yes. All right, let's go to a minute average. Spread out a little bit. That's the line style, okay? You also have this one, which is primarily the same thing. Then you have the area. You see that it's shaded in. But let's go back to candlesticks, because the reason why I like candles is because you can actually read how it indicates. The other one is just, okay, it went down here, it went up here. Candles, in my opinion, are one of the most detailed tools that you can use to actually read how a stock is performing, because I like to count these. So as I'm looking at this, okay, I'm gonna start from the top. I have a green bar, red bar, then it drops down. So it had a big dip. I wonder what happened. And if you want to even dive deeper, you can actually go read Hertz News. We either be on Market Watch, WeBull, Robinhood, whatever, America Trade, Charles Schwab, Fidelity, wherever you want to go to read the information, you can go and understand why that stock had that big drop. Because usually something happened, okay? Usually they came out with something, or they took out a loan that they needed to get out of bankruptcy. Who knows? A lot of things happen in the investment world, but you have to know the history, okay? You have to know the history again. So then it went green, then it went red. So that's why I said that Hertz is very volatile. And that's why I said that this stock is, in my opinion, is good for day traders and short-term traders. Even though it says hold it for a short time, okay? So if it bolster up for $10 and you bought it at $1.50, man, you made almost 500% on your return, okay? So here we go again. And now granted, there's money to be made if you are option trading. So if someone is option trading because they're following Hertz and they're reading the news, they're looking at the indicators, looking at the data points, they're watching everything that's involved in this histogram, then they'll put in puts. They're like, I'm gonna put in a put, and every time this stock drops, they're making money, okay? A put, when it comes to option trading, is essentially you are betting on the stock to drop, okay? You are betting on the stock to drop. When you call a call, you're essentially betting on a stock to appreciate in value. I know I'm using gambling terms, and I like to tell people investing is not gambling, because you don't have all the tools that you have right here, okay? So let's look at something else. Look at another tool. I'm gonna add some indicators in here. Let's look at the MACD. You see how that popped up here? It's showing you the fluctuation of a stock moving. But let's get a definition. I had it up here for you guys. The MACD, short for moving average convergence divergence. Okay, not the movie. It is a trading indicator used in technical analysis of stock prices created by Gerald Appel in the late 1970s. I'm sorry if I butchered his name. It is designed to reveal changes in the strength, direction, momentum, and duration of a trend in a stock price. Again, the strength, direction, momentum, and duration of a trend in a stock price. So you have to understand the moving average, convergence, divergence, okay? It's a trend. So that is essentially what we're looking at when we look at the trend. They said this part of the histogram shows that Hertz is essentially was appreciating in value. And as you can tell, you see how this gives you a better representation of the mountain, where it shows that the mountain at its apex, at its peak, okay, you reach the pinnacle of your, okay, there's a lot of Simonia's words that all mean the same thing: apex, top, pinnacle, top, so on and so forth, or summit, top of a mountain. But anyway, you're at the top of a mountain and it shows that it's triggering. So these are indicators in this histogram that is showing you that a stock is about to flop, that a stock is about to depreciate in value. And here you go. Here's your histogram. Here's just showing you it was up at the top. Then you have your movement averages as the histogram below shows you that it's depreciating. Then the other indicator is showing you that it's about to come back up. Now, at the same time, look up here to the candlesticks and you can actually see the exact same thing, but it looks differently, okay? Okay? So I'm gonna take away the MACD and I'm gonna pull in the bowl. Now, the bowl is very dangerous and I'm gonna show you, let me see, where's my definition at this freaking Zoom thing just keep getting in the way. Okay, Zoom, okay, yeah, you're doing a good job. Jeez. This is crazy. Let me just move it out the way. Give me a second, guys. All right. So they're showing you essentially how to use a bowl, but I'm gonna read the first paragraph so you guys truly understand. It says a bowl, I call it a bowl, it's probably a ball, but bowl indicator is based on statistical standard deviations, okay? We understand that deviation means changes. Principle design a very simple and practical technical analysis indicators, okay? Bowl indicators, also known as the Bollinger Brand Index, is to study market trends in a long-term technical analysis tool. Keyword, long-term. Because of its flexibility, intuitive, and trend characteristics, bowl indicators have become widely used in the market investors' hot index, okay? This experience with their own experience describes how to use bowl indicators for stock investment. So again, you have to have that experience. So let's look at the bowl here. Look how the bowl actually copycats or essentially shows you the ranges of the candlesticks, how it all intertwines to give you another analysis tool of this stock should be rising. And as we're looking at this, look at the point here at the top of the green candlestick, showing that is an indicator that this stock probably could move to the top of the bowl, which is a very risky move. Don't forget, bowl is very risky and it's for long term. Okay, we're using it in a minute average as the stock market is going, and the candlesticks is showing us. Okay, a lot of this also have to do with volume, how much the stock is moving, how many people are buying and selling. Well, we're going to get shortly into that. I'm moving right along. I don't want to bore you with that particular information. Let me move this again. This is still in my way. And we're going to change our indicators, okay? Let's move to one of my favorite is the relative strength index, okay? We're going to read about that very quickly. And the relative strength index is a technical indicator used in the analysis of financial markets. It is intended to chart the current and historical strength of weakness of a stock or a market based on closing prices of the recent trading period. The indicator should not be confused with relative strength, okay? I'm gonna read that very quickly as well. Relative strength is a ratio of a stock, ratio, an average of a stock price performance to a market average performance. It is used in technical analysis. It is not to be confused with relative strength index. So let's move right along here. Let's go back. And we have our RSI, our relative strength index. And that's what I was showing you. I love the one, it copycats right under the candle to show you the graphic representation of how the previous trading period and the current trading period and how it coincides. Now, granted, when I first started this video, as we're live here, Hertz was at $1.40 something. Look how we are looking, the candlesticks. Now, this is about to blow up. Okay, what I mean is, I'm looking at my candlesticks. I got 1, 2, 3, 4, 5. This is about to drop. This now, that doesn't mean it's about to drop because I'm saying it's about to drop. I'm just saying the pattern. It could possibly go up. As I told you, usually when a stock starts to go up, the pattern is anywhere from 2 to 4. Okay, yeah, does it reach 5 and 6 and 7? Yeah, when a stock goes to 50%, 100%, etc., it does that. But as a point, and it also has to do with volume. It also has to do with the news. It also has to do with trade. There's a lot of information that's going on right now that's making the stock almost $2. So guess what? A day trader would have dropped $5,000 when it was $1.40. Because right now, he already made so much money. Because I'm going to tell you, I know some day traders, and I've day traded myself. I only day trade for 2 hours a day. I don't day trade the entire day. No, I take about 2 or 3 stocks. I do my research the night before. I see any pertinent news that's coming out. I go to maybe Seeking Alpha, Market Watch, the Bull, the Motley Fool. I use so many websites to get that information. And it only take me about 30 minutes to an hour. Because guess what, guys? What you gonna do? You're gonna watch a movie, you're gonna watch a show, you're gonna eat some food. Like, you have the time to do an hour research to invest for 2 hours the next day. And my thing is, if you don't have the 3 strings up here, the 3 strings, maybe you got 2 strings, you probably only want to invest 2 stocks. And look, here it is, ladies and gentlemen, right before your very eyes. What did I tell you? It was going to drop. See, it's a pattern and it's dropping. Look at this. Right before our eyes, you got green, 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 and then it dropped. That is the normal pattern of a stock. I'm not a genius. I'm just looking at it, because it's kind of like, oh man, he's really smart. No, I'm not. I'm not smart. I am looking at patterns, and you can look at patterns too. It's like, you know what? You see a kid on a playground and they're playing around. You like, you know what? They're going to fall. They're going to fall because I saw two or three other kids fall, and then boom, he falls. You're looking at a pattern, and sometimes you get that one kid, just like a one stock, it's like, oh, he going to fall. Wait a minute. Oh, he's stronger than I thought he was. You get what I'm trying to say, right? So it's kind of one of those things. But nonetheless, you see that it stopped. Now, could it go back up? Now we got it going back to a green bar, a green candlestick. All right, let's move along. So we talked about the histogram. We talked about the relative strength. We talked about the movement average, convergence, divergence. And let's get into one more. We're going to take away the RSI, which is a great indicator. I love the double line here. You have the actual graph, and then you have the line version of it here, okay? And again, if you want to know what they're called, the line styles. Got this thing all in the way. You have the line styles. You have the candle, the hollow candle, and you have the area, and then you have the line. So that particular style is called the line, and then you have the bar graph above it, the relative strength index, okay? So let's move to our indicators. Let's take off the RSI, and let's put on the VWAP. What is the VWAP? Okay, now as you can tell, that VWAP is this kind of goldish yellow orange line that's running across. Now, I'm gonna read the definition, we're gonna get into it, and we're gonna get out of here. The volume weighted average price. The volume weighted average price is a trading benchmark, okay? Now, I'm not gonna assault your intelligence, but some of you like, okay, what is a benchmark? Did I spell that right? Okay, benchmark. Benchmark is a practice of comparing. No, that's not the definition. My apologies. Okay, a standard or point of reference. A standard or point of reference against which things can be compared or assessed. So keep benchmarking your head, okay? A point of reference, which things may be compared to or assessed. It's kind of like when I was hanging pictures, it's like you got a nail here and I got a laser. That nail is my point of reference, and I want to make sure that it's level to the other point of maybe, 12 inches, how long ever the picture is. It's my point of reference, okay? So let's talk about the VWAP. So it's a trading benchmark, okay? Point of reference used by traders that gives the average price a security, okay? And a security, they're just talking about a stock, so I'll replace it. Used by traders that gives the average price of a stock has traded at throughout the day based on both volume and price. Again, how many stocks are being sold and bought at what particular price? It is important because it provides traders with insight into both the trend, okay, dealing with the reference point, the trend and the value of a stock, So let's go back. Here we have the VWAP, okay? And we're looking at how people are trading throughout the day. Now, I told you we have the big drop and we have two candlesticks here. As you can tell, the reference point is starting at the beginning of the day for this particular thing. And it did a deep dive, and the candlesticks is also represented as far as below. Also, if you even go lower, if you can see my screen here, the relative strength index is below that as well, okay? It's kind of grayed out, but you can still read it. But the VWAP is showing you how people are now buying the stock. They're now buying a large volume of the stock. All right, I'm gonna take a pause. I'm gonna read, because when we first started this video, it was at $1.40 something, and right before your eyes, the information I'm giving you is pertinent because now it's at $1.70, and we are looking at patterns. We're looking at a movement average, convergence, divergence. We're looking at the Bollinger Index. We're looking at what's the other things that I was naming? The movement average. We're looking at the volume. We're looking at all these things. So guess what, ladies and gentlemen? I can add the volume. Okay, I can add the volume. You see how it's highlighted here? It's showing you how people are buying and selling the volume, and how the volume is being bought out in actually people are buying stocks. I can give you the movement average. See all these twos? Now, if you had all these on here, this can get very, very overwhelming. It can get very overwhelming. Now, can I read this? Essentially, I can, but it's too busy for me. It's too busy for me. So I may look at, now I love the MACD because it shows me a lot. It shows me a lot. So let's just take some of this away. I'll take the VWAP away. I'll keep the RSI. I'll take the bold movement average, and I'll take the volume away. Okay, you see what I'm looking at now? So I have a lot of information that's all tiered. That's why I kind of like WeBull, okay? I know it sounds like I'm promoting them. They did reach out to me, but I did take a look at their platform, just like Robinhood reached out to me. But I like it. I like all these tools that I can just click on. Robinhood doesn't have it. That's why I say WeBull is a beast. Anyway, let me read your notes here. It says, D. Charles says, don't forget about the bankruptcy and how they plan to issue 245 million more stocks, okay? Or D. Charles, they may even split their stocks. You got to be cognizant of that. That's why this is essentially all the analysts are saying hold it. They're saying hold it to see how this pans out. But again, we're already up $1.80, $1.80, about to be $1.90, okay? So I want to point this out because it's very important. When I first started this video, it was $1.40. If you dropped $1,000, $2,000 inside the stock, you would have made 40 cents on the dollar, and you could have made good money. Because some people, they're thinking that investing, that your stock is going to appreciate in a day at 100, 200, 300%. Does that occur sometimes with certain stocks? Indeed, it does. But if you can make 40 cents on your dollar, that's still a great investment. That's still a great investment. And I'm not talking about you investing into property. I'm not talking about you investing into a company. That's nothing on your money, in my opinion. But even investors say, no. That's great because you're making 40 cents on the dollar. Okay, you're making 40 cents on a dollar. Okay, that's a good investment, especially now. In order for your profit margins to be tantalizing, okay, to be tasting, is you can get that up for one, meaning you bought a stock at $1 and now it's trading at $2. So you made 100% return. You get what I'm trying to say? So you make really good money off of that. Elliot Finesse says, easy way to remember how calls and puts move. Think of them like this. You call someone up and you put something down. Okay, that's a good way to remember it. He also states, or she also states, I'm sorry, I don't know your gender. The gist of the RSI is basically anything under 30 is oversold and anything above 70 is overbought. That is absolutely true. So let's look into this. As we're looking at the number, it's showing you that the RSI right here, okay? You see these numbers, and every time I go over it, it's changing them. So let's look at it plainly. So if you can see the RSI, it says 62. So basically what he's saying is that once we get closer to 70, it's going to be overbought. And as it gets closer to 70, the candlesticks is also going to be a great indicator of it dropping, right? Because it's being overbought. Because in the investment world and trading, certain companies and organizations and these investors are saying, well, they shouldn't be valued that high. I don't know why people are buying that many stock. And so any uncertainties in the market have that particular stock or even have the entire market, okay? Because sometimes the whole entire market could be overbought. And when those indicators show that the entire market is overbought, then the market starts to drop. I'm gonna tell you what happened last week. So last week, I was watching Trade TV, and there were a lot of analysis on, and they saying right now the market is overbought. And what happened last week? The market did a decline because a lot of analysis, they were saying how the market was overbought. They're like, wait a minute, the market shouldn't be doing this good because COVID-19, unemployment, this company just got out of, they were giving all these indicators. They was giving all these indicators, and they're like, well, look at the relative strength index. It shows that it's over. They were looking at all these other analysis too, but they were looking at the RSIs. They was looking at the VWAP, the volume weighted average price. They was looking at how many people was buying particular stocks in certain exchanges, the New York Stock Exchange, S&P 500, in the NASDAQ. They were like, no, the market is overbought. The market should not be performing as well, and it started to decline. So the reason why I gave you this overview, because I don't like to speak terms that I don't explain and you may not understand. Because a lot of times I get people to ask me to invest for them. I get people to ask me what stock they should invest in. I'm here to give you the information. I'm here to train you how to look at indicators to make your own educated decision. Because with information, okay, with information and education, you can become strong. You see those guys behind me? You can become strong and you can run either by yourself or we can run together as strong people. So with information, guess what, ladies and gentlemen? It's going to take a little bit of your time. It's going to take a little bit of your time. Now, this is an overview. I didn't dive too deep, but go look up RSI and how to read it. Go look up MACD and how to read it. Go look up the Bollinger Index and how to read it, the VWAP and the volume. Go read how all those things input and intertwine in indicating and basically at the end of the day, guessing how a stock is going to move. I'm going to tell you one of the biggest things that particular WeBull or any other platform doesn't have. They have it embedded. The news. They have the news. So let me look. I'm just going to show you this really quickly. Right here on the left side, let me move my little thing here. Press releases. Okay. It says 3 Hertz Global Holdings. It says June 18th. Initial statement of beneficial ownership of securities. That's a see, right there, you can go into the story, but it's already telling you that the stock is going to do well. That's just my opinion. The stock is going to do well. Then it also says Joint AT's current report. So let's look at this really quickly. You go right into it. Now, this gives you all the information. I love the SEC forms. Now, a lot of this, you're like, what is going on, right? But it's giving you the information that they're buying stuff. Okay, that they're buying stuff. EVP Global Marketing and Custer. Okay. Again, the news is very imperative to how stock is going to perform, because quite frankly, ladies and gentlemen, I'm mad that I didn't buy none of these shares of Hertz today, because here I am running my mouth, giving you the information. It was at $1.40. Now it's $1.90. It's about to hit $2. Now I think it's about to drop. We're looking at the RSI. It's over 70%. And I'm looking at my candlesticks and I'm reading it. So we got 1, 2, 3. We got the hammer. See right here, if you can see my mouse, let me see if I can blow this up a little bit more. There we go. Spread it out. Now, as you see here, we got a solid bar and then we have a hammer. That top part, usually the hammer falls over and it turns red. But no, it went to another measurement point of the share price and went up. Then it has another hammer and then it went up. But as I'm looking at all my analysis here, I'm looking at the MACD, the moving average convergence divergence. And I'm like, it's about to dip. That doesn't mean that it won't go back up. It'll dip and then go back up, because Hertz still is doing primarily well. $2. See, there we go. Now that just hit $2 and ooh, the RSI flattened out, but it's still over 70%. And my histogram, my MACD, wow, it's still performing primarily well. Wow. Okay. Again, these are just tools that will help you to make an educated decision that 10 times better than gambling. 10 times. Gambling doesn't have this. Gambling is, we all know it is luck. It is luck. Oh, he knows what he's doing. No, he see patterns. That's the only tool that gambling really have. You see patterns. That's it. And that can actually help you, but it's all luck. Anyway, I'm going to read your final notes and I'm going to get out of here. Let's see. I've never met anyone named Elliot that was female. Thank you. My bad, Elliot. My bad. You just be amazed the names that some females have. Anyway, D. Charles, I'm thinking about a call option at $2 with a break even at $2.20. I don't want to steer you wrong, because Hertz is such a volatile stock. Look at the history of Hertz. Within the last 52 weeks, Hertz was essentially $20.80-something. Let's just say $21. And it was also under $1. So do the research, look at your tools, and make a sound decision, and you can make some money. So everyone, if you like this video, please like and subscribe. And my apologies, Elliot. Now I know that you're a male. I know you're a long-time subscriber, so that's my bad. Anyway, guys, have a great day. Learn money and be inspired. I'll talk to you guys on the next one. Peace. You have a good day.